Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, everyone, to Real Estate 360 Live. I am your host, Ryan Sloper, joined by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, Real Estate 360 is designed to build the Washington, D.C.'s metro housing markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. Before we jump into the U.S. records first monthly budget surplus since 2008, I wanted to go over to another article, which was basically Ally's mortgage unit files for bankruptcy. Ally Financial's ResCap mortgage unit filed for a prepackaged bankruptcy protection on Monday, which was a move that the taxpayer-owned bank says will allow it to take another step to repay the Treasury. I find this interesting, Louis, because I believe they borrowed something or they bailed out from the Treasury for some $15.8 billion back in 2009. And I believe that to date, they've only probably paid back 2 or 3 or 4 million. Maybe no, actually $5.5 billion has been paid back so far. And this is just, another lender that just seems to be going under. It's just one after the other. I'm not really sure if after all this bankruptcy is done, if they're going to be paid back in full. I think that they were hoping that they might be 2/3 paid back after liquidating a lot of their assets. But the company, which started as the finance unit of automaker General Motors under the GMAC name, changed its name to Ally following the bailout. Obviously, probably to try to create a new brand and not associate itself from taking billions of dollars from the Federal Reserve. Besides continuing its auto finance business, it now operates an online commercial bank. And Ally has said that it's looking at a possible sale or other strategic alternatives for its international business. The company said that it expects GMAC to continue to make and service mortgage loans while the bankruptcy process is completed. The portfolio of home loans it holds, now valued at less than half of its original value, will be auctioned off as a part of the bankruptcy process. I can't really see them really having too many assets that actually have a lot of equity in them. So I would say that you could probably chalk this up as not taxpayers not going to be returned the full amount of money that was actually issued to them. What do you think, Louis?
Of course not. Just a long line of companies that are either funded by the government or bailed out by the government that we lose money on. Look what happened to Fannie Mae and Freddie Mac.
Yep.
They got bailed out. They keep coming back for more money. You've got all of your green energy, Solyndra, and other companies that were given money. The government is not the best place to allocate capital. They just don't know how to do it.
Yeah, I mean, it's very troubling when the Treasury currently owns about 74% of Ally's outstanding stock. It just can't happen. I mean,
the Treasury should be like any other entity. It should be acting in the best interest for the financial benefit of the country, not for some social reasons or policy reasons, because then they just ship money to different places based on politics and not based on economics, and economics wins in the marketplace, not politics.
Absolutely. And I want to kind of segue from that to the other article that I was looking at, I believe I sent to you on Friday, which was U.S. records the first monthly budget surplus since 2008. That was the headline. Okay, so I guess great. Sounds great if you just read the headline like most people do. But just knowing what I just told you about Ally and then the bad potential loss that they have coming, that we bailed out that bank, and now we have something where they've recorded their first budget surplus since 2008. Oh, that's, it sounds great and rosy. There's this great rosy picture that's painted by that. But ultimately, there's not going to be a continuing trend of a surplus quarter over quarter.
Well, I don't know, Ryan, that article didn't say much. It must be because in April is when people who owe money to the government, as part of their tax return, have to send in a lot of money.
That's what I'm thinking, because it said basically, I think it was they were from higher tax receipts and spending was lower in April, that they actually had this surplus.
Not like they're cutting spending.
No, we know the spending's not stopping, so I'm imagining it's probably just more people are actually paying their actual taxes in April, or they're at least anticipating them to pay.
Right.
Because that's the only thing that really makes sense. Because, I mean, to date, this fiscal year, the United States has racked up $720 billion deficit. And they're like, oh, well, you know, that's less than the $870 billion recorded during the same period last year. Well, big deal. You know, overall, the current legal limit on borrowing right now is $16.394 trillion, and the total accrued debt right now to that limit is 15.6. So we're almost to that limit right now. And, you know, for anybody that thinks that the government's doing something right now to take us in the other direction, it's not going to happen. It's not going to happen anytime soon. Like Louis and I always say, we use the term kick the can down the road, but I mean, these numbers are just staggering. I don't see how we can feel like we're in an economy that can even rebound with these type of numbers.
No, I think we discussed last week that it's taken, you know, $2.5 billion worth of debt to make $1 billion worth of GDP growth.
Yeah, and it should be.
That's not growth. That's negative. If you have to borrow $2.5 billion to make $1 billion,
it's absurd.
You haven't made anything.
No,
you just increased your debt.
And, you know, and this kind of this whole economy is based on the concept of debt and keeping people in debt. Big banks are making all the money they can, or you know, basically borrowing it from the Fed for nothing, and then, you know, lending it out and giving a consumer the debt so they can be the ones that make the money. And that's always been the case. And that's you know, a lot of people are like, oh, you know, now's the time. Times are tough. I'm going to try to save money. But guess what? They're not paying any interest on the money that you put in these banks.
You can't save money. You end up having to put it in the stock market.
Right, which we talked about last week as well. A lot of malinvestments created right now because people are needing, you know, money to live off of, and a lot of, you know, seniors out there that would take their retirement accounts or savings and typically put it into a CD, maybe making 3% interest that they could live off of that, are now making below 1% and can't live off of it, so they have to put it back into the market to gamble with, to hope they get enough money back to you know, give them money to live on throughout the year. You know, it's pretty sad that has to take place.
There's that sadness, and then there's also, you know, what savings do is it creates a capital resource so that real investments can be made that would help grow the economy.
Yeah.
When you build up your savings, then those savings get put into production, and production is what creates wealth, not borrowing money and spending it.
Well, it's mind-boggling to me that, you know, they would just take J.P. Morgan, for example. They lost whatever it is, $2 billion plus. They'd rather invest in these risky derivatives than lend the money out to a small business owner who, you know, really has the want and desire to make his business successful.
Well, the reason they'd rather do that, the amount of money they can make, and it's far greater than making a small business loan for 4 or 5%.
Yeah, but you know what? You and I talk about this all the time, Louis. You don't have to offer it at 4 to 5%. You know what I mean? Like, there could be risk-associated things with the interest rate, and if people can still qualify for that, they can make more money than the 4 to 5 to 6% if they wanted to.
But also, think about a bank. They can't make money instantly. Trading, you can make money in a push of a button.
And you can lose it in a push of a button, too.
Oh, well, that we know, too. It's high risk, high reward. But, you know, when you make a loan, you have to hire people, you have to have loan officers, you have to examine the quality of the loan. There's some heavy packing and lifting running a loan origination, as you know. But the trading operations, they can make a fortune, and it's a lot easier for them when they understand the game and they're that size. They can generally win on most of their bets. You saw, I think there were statistics that, and J.P. Morgan and Goldman Sachs win, you know, a phenomenal percentage of the time on the bets that they make, because in a sense they are the market.
Yeah.
They know what's going on. In a sense, they know the market. They can win in that market.
And they almost hedge against their, you know, one side of their bet to make sure that they're going to gain, you know, whether they're wrong or right. And it seems like that maybe that's why he made the comment that it was stupid, probably because they expect to make money on every trade they make.
Well, that's right. They have more control, if you think about it, over the market, the general market, than they do on the ability of some guy to repay his loan.
Yeah. I agree with you there.
That's
it's just
why they do that.
You know, it just, I think it maybe just bothers me to the core, because there's just, you know, they wonder why our overall economy can't turn around is because really the banks only care about themselves. It's not about the community. It's not about the general public. As long as, you know, the CEO, the CFO, the CIO, and all of the employees underneath there are making money, it doesn't matter about everybody else. But in return, you don't really have consumer spending picking up. You don't have new businesses being started. That's what, you know, really drives the economy.
You don't even need people to have those altruistic concerns if the economy is functioning properly. If people just looked after themselves and their own financial interests, things would get better. The problem with the banks is that they live in this strange bubble, which is 100% protected by their size and by the bank, by the Federal Reserve and by the government, that they're able then to engage in activity that otherwise would be too risky and would be self-correcting, that they wouldn't make those bets.
Yeah.
So they're able to make a fortune because they're playing, in a sense, a rigged game. Now, if they had to do honest banking, meaning lend money to business people or to raise capital for companies that are going to create jobs, they could be as greedy as they want. They'd actually be helping the economy. But just doing trading in a protected environment doesn't help anybody.
Now, honest banking is a term I haven't heard used in a while, Louis.
Well, there is honest banking, and ones that put deals together,
yeah,
ones that raise capital for companies. But the large majority of the profits of banks are not based on your traditional investment banking, fundraising activities. They're based on trading.
Yeah, and it wasn't always that way. And you know,
that started in the with Lehman Brothers, the bond trading operations. But bankers generally weren't looking. You know, you didn't make a lot of money, billions of dollars on trades. You made it by working with the top companies or the new companies and raising capital for them.
Yeah, absolutely. We're coming up on a break. When we come back, mortgage interest cuts down 29% from last year. Find out what the actual details are when we come back.